I think with inflation, you're right. That wasn't. We were expecting it to come off a bit from that July pickup, primarily as has been mentioned because of the floods. So some of those supply constraints due to the floods have eased off. Looking ahead, though, we still think that it will continue to edge down because demand conditions remain sort of fairly weak within the economy, and also we have some high base effects for 2019. So we're looking for inflation to be about 3.1. Now, that does suggest for the year, that does actually suggest that the PBOC does have some room to ease monetary policy, but the fact that we are seeing some stabilisation in the domestic economy suggests to us that they're unlikely to implement some broad-based easing anytime soon.
Okay, Sian, so in line with targeted easing and your expectations there, can you give us more details on what you're expecting and under what timeline when it comes to the PBOC measures?
Well, that's going to be interesting. I mean, obviously, I think they're going to continue with their commitment to ensure liquidity in the market. We saw that there was a big injection recently into the market, and we think that will continue. So they're probably going to want to provide some more support for those sectors of the economy that aren't actually showing such a recovery. So, I mean, the economy as a whole has, we've obviously seen that there's been a pickup, but it hasn't been broad-based. And so it's the SMEs, it's the consumers, is trying to make sure that they stabilise the labour market. So we'll be focusing on those sectors going forward. In terms of the timeline, I think it's going to be seeing how the data plays out. We did positively see that there was a pick-up in the PMI Services Index for August, so that does bode well for the second half, and is in line with our expectations that consumers and the services sector will continue to improve. But there's going to be ongoing weakness continuing, notably in tourism.
What does that mean for the overall growth environment in China? How are you mapping the recovery from here, Sian? Good morning.
Okay, so we're looking for a fairly solid increase in GDP growth in Q3. So we expect that this is an upward trend, that recovery from the first quarter will continue over the second half. We think it's going to be largely led by investment, notably in infrastructure due to the fiscal government support as well as real estate. We are looking for some improvement on the household sector side, but it's going to continue to lag. Particularly with sentiment, we just need a continuous improvement in sentiment and continuous improvement on the labour market side. Externally, it's probably going to be a bit bumpy. Obviously, exports have continued to show continued momentum and continue to improve. It looks like they've gained some market share. But there's some challenges, notably, there's a number of headwinds about any kind of resurgence in some of those key markets for China. So it's probably going to be a bumpy road for exports as we continue over the next sort of 6 months.